to ensure that inflation progressively aligns with the target while supporting growth. Let me emphasize that the decision to pause on the repo rate is for this meeting only. I would now like to explain the MPC's rationale for these decisions on the policy rate and the stance. While the recent high-frequency indicators suggest some improvement in global economic activity, the outlook is now tempered by additional downside risks from financial stability concerns. Headline inflation is moderating but remains well above the targets of central banks. These developments have led to heightened volatility in global financial markets as reflected in sizable two-way movements in bond yields. Fall in equity markets and the US dollar shedding its gains from its peak of September 2022. Amidst this volatility, the banking and non-banking financial service sectors in India remain healthy and financial markets have evolved in an orderly manner. Economic activity remains resilient and real GDP growth is expected to have been 7% in 22-23. Consumer price inflation, however, has increased since December 2022, driven by price pressures on cereals, milk and fruits. Core inflation remains elevated. Looking ahead, headline inflation is projected to moderate in 2023-24. The monetary policy actions taken since May 2022 are still working through the system. Accordingly, the MPC decided to keep the policy rate unchanged to assess the progress made so far, while closely monitoring and evolving the inflation outlook. The MPC will not hesitate to take further action as may be required in its future meetings. To recapitulate the actions taken so far, we have increased the policy repo rate cumulatively by 250 basis points in the last 11 months starting May 22. This was preceded by introduction of the standing deposit facility, that is the SDF, at a rate 40 basis points higher than the fixed rate reverse repo. Thus, the effective rate hike since April last year has been 290 basis points, 290 basis points. These increases have been fully transmitted to the overnight weighted average call money rate, that is WACR, operating target of monetary policy, which has gone up from daily average of 3.32% in March 22 to 6.52% in March 2023. It is now necessary to evaluate the cumulative impact of these rate hikes. Under these circumstances,